Hello everyone and welcome to our US jobs report recap. My name's Craig Erlam, Senior Market Analyst at OANDA. The point of this video is just to give a little look back at the US jobs report following the preview video that we did, see what the numbers were like and see how they impacted the charts. The jobs report itself was almost perfect, missing one crucial component, which is what I alluded to in the preview video, and that's earnings. Average hourly earnings beat expectations but remained the same at 2.5%, continuing that downward trajectory really from the start of the year when we'd peaked at 2.9%. Underwhelming, not what the Fed wants to see. The Fed has a dual mandate. Part of it is inflation, and inflation is currently running below its 2% target. Earnings is a real key component of that. If people are earning more money, they're spending more money. If they're earning more money, the companies are paying them more money, so have to raise prices in order to do so. But we're not seeing that enough at the moment. It's a big concern from the Fed, and it's going to call into question, which has already happened, whether the Fed can continue raising interest rates in an environment that doesn't have enough inflation. The markets were already unconvinced by the end of the year. It was below 50% chance, and it remains that way now. The rest of the jobs report was very positive, but it was positive in an area that was already strong. Unemployment fell to 4.3%. That's below what the Fed deems to be full employment. The labour force participation rate rose to 62.9%. Non-farm payrolls, the headline figure, that one that really tends to impact the market immediately after the release, rose to 209,000 ahead of expectations, and we had a nice revision to the previous number as well. So we were mostly good in this department. The only disappointment really was those average hourly earnings, which are going to continue to cause a headache for the Federal Reserve. So you think, what impact does that have on the markets? Well, interestingly, we saw a nice dollar rally following the actual result. That's not surprising because unemployment fell and we had a good jobs figure, and the market tends to respond first to those things. But we did have a rebound, and actually since starting this video, we've now seen the second phase of that dollar rally, which at times didn't look like it was going to come. We saw the initial sell-off here, and it fell around 40 pips. This is Euro dollar 15-minute chart round to 118.30. It held up at the first real level of notable support and resistance, with this level having been a notable level on a number of occasions, as you can see, since the start of August. And we held up around this level. And the reason why it looked as though this may not catch on was because following this touch, we came all the way back up and almost touched the level where we actually started pre-report. We saw people fading the moves. Clearly there was a belief that any dollar strength was not going to be withstood. So we saw this big fading of the move, heading all the way back towards the level which we started. But then we've seen some selling again, and it took some time to get going. Initially we were, for 5-10 minutes after the report, or after the retracement, we saw it kind of gradually making its way lower. There wasn't much signs that it was catching on. The sign that it may have been catching on though came when we made a new lower high. That's the big signal, and since then we've come back, and since starting this video we've had that next big wave, and now we're back just below 118, which is actually the next big test for the euro dollar pair. 118 is this previous support just here. If we can break below here, then we may be looking back towards this 117.50 zone and possibly a little bit below. Personally, I'm quite surprised that we've seen such a strong dollar rally, and I say such a strong, we're talking 70 pips, this isn't a mammoth rally, but I'm surprised it's even this strong, because I do not fundamentally believe it has any impact on what the Fed is going to do later this year. Maybe people were just anticipating a bad report, and the fact that we had a good report on the job side is causing such a move. Cable, we're seeing a similar move as well. We had the first wave down, we did see that retrace. Also, this is the hour chart, and then now we are breaking below a nice little trend line here, which we actually highlighted on the video previously. This trend line goes back to the 21st of June, so this could be quite a notable break here. We're looking at a time when cable was already looking a bit peaky. We'd broken to 132.50. And we looked like we'd actually caught quite a strong rally into those 132.50s, but the pound weakness yesterday from the Bank of England, combined with this dollar strength now, is going to put this trend line under a lot of pressure. Target this level of support, and if we can break below here, then potentially we are going to see a rotation to the downside, 130 being another key level here. Dollar yen again is another interesting one because again we saw that rally and then we saw the nice pullback. The pullback wasn't as significant as it was with euro dollar, but again we entered this zone of notable resistance and support throughout this period. Again, this is the 1 hour chart and it looked as though that was going to hold, but now we're seeing another drive higher. If we can get through those, back through those 111s, then this could start to look a lot more interesting once again. It'll be interesting to see if we can close above yesterday's high. That could be a nice little bullish signal. We've only just broken below the 233-day simple moving average, but we are still below that Ichimoku cloud, which I do think is important. But things were starting to look quite bad for dollar yen, and it seems people are really all of a sudden starting to like this report when there was clearly a lot of uncertainty about it even 5 minutes ago before I started this video. This video is taking place just over an hour after the actual result itself. Looking at the commodity currencies, New Zealand dollar, we're still holding up around these 74.10s. Again, a notable zone of support and resistance for a while. This again, like I say, an hour chart. If we break below here, then we could have a nice head and shoulders. So I think this is quite key on the 1 hour chart. You can see the shoulder here, you can see two shoulders here, and a nice head up there. A break below here takes out the neckline, possibly taking out the rising trend line at the same time, and all of a sudden things start to look a lot more bearish on this New Zealand dollar pair. And I think this is going to be a real key thing as well for the US dollar, because we've got to remember, and I think I touched on this either in the pre-NFP report this morning or in yesterday's video, the US dollar index is trading around 92 or 93 at the minute. This is the lowest levels it's traded at for, I think it's around 15 months, and throughout that period we've touched this level on a number of occasions and it's always rebounded sharply higher. Below here there's not much support in the near term. There was a sharp rally that led into that, so a break below 92, 93 would have been extremely bearish for the US dollar. So with the fact that we're seeing this rebound again, could also be an oversold dollar play. We could be seeing people that think the dollar's oversold and therefore maybe it was a bit prone to some upside, so that could be a factor as well here. But what we're looking at is technical levels that are broken that would signal that we're going to see more dollar strength going forward, and a break of this here, a break of the neckline of that head and shoulders, potentially from a textbook move perspective, triggering a move potentially back to say the 70 what we are here, 74, 74, 50, so 73.50s, but breaking the neckline, breaking the trend line in that point, and also this previous support. That's on a conservative basis. On a more aggressive basis, that could take us back towards these 72.50s. So again, a solid break of that trend line. So potentially some very interesting moves to come in the in New Zealand dollar as well as the others. The Australian dollar, again, the 15-minute is what we were looking at initially following the report. We had this big sell-off, a nice big retracement, but then that's caught on again. We've broken through the previous low now with this second wave of selling, and what that does on a daily basis is it means that it actually doesn't do too much on the Australian dollar. The next key level here is around the 78.75s and then 78.50s. So there's not, I'd say, a massive level being broken on the Australian dollar at this time. And finally, the dollar Canadian dollar. Again, we weren't really near a major level of support or resistance on this either. The next notable level comes around these 126.75s. Again, that is previous support as we pointed out on the last video. A break below here and we could be looking back towards these 127.70s, which is this previous low, a little bit higher, maybe again around the 128s just above, but at the minute we're still yet to test these 126.75. so that's our little recap on the jobs report. I hope that gave you all the information you need to know. Please do leave any comments below. We'll be putting out more videos again next week, and aside from that, good luck with your trading for the rest of the day and have a great weekend. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.